Hello folks, so in today's video we're going to go through the top 3 stocks set to explode in February 2024. I will go through each of them, why they are such a big deal, and whether or not it makes sense to buy now. And the only thing I ask in return is that you hit that ravishing like button, and also don't forget to subscribe. And as always, make sure to do your own due diligence on all plays presented here on the channel. Remember, if you're the one taking the risk, you gotta be the one doing the ultimate frisk. Okay, number 1, the tier of Palantir, PLTR. So Palantir today once again reiterated its stance as one of the most underrated, but also most proven AI plays in the entire market. Palantir reported earnings today and it blew lots of folks away. CEO Alex Karp said the company is seeing surging demand across industries and sectors for artificial intelligence platforms. And likewise, the stock had a pretty immediate reaction. Now, as somebody who has advocated for Palantir stock at virtually every single price, I gotta tell you that if you're going to play Palantir, you have to know that Palantir is underrated, but we'll continue to go through many cycles of underrating, where short sellers try to beat it down to the ground, the media tries to say it's garbage, and lots of people sell. Right now is not that kind of cycle though. About 7 days ago, we made a video explaining that Palantir is one of the top small cap stocks for 2024, and the reason is because not only are their platforms a game changer for dozens upon dozens of massive institutions and corporations and hundreds of smaller ones, but they are in a cycle of printing money. They are starting to really print. Their business model is starting to really flourish. The first thing that markets were focused on today was Palantir reporting its first profitable year ever. Remember, the argument in 2021 and 2022 when Palantir pumped and then dumped was that Palantir was a sinking ship because they're just going to keep burning through money. CEO Karp had pissed off a lot of Wall Street because he could have easily chosen to invest in less client acquisition and less software development, and he could have decided to turn a profit much earlier as a result. But instead, he said, you know what, I'm going to go ahead and I'm going to invest in more client acquisition and more R&D, prioritizing future growth over short-term growth, and now you're seeing the result of that, the fruits of that labor. Now, we're still at the beginning of an early chapter where Palantir is just starting to show those fruits, and you've got many years left before you really start seeing the exponential power of Palantir's business model. But today was pretty damn solid. Revenue grew 20% year over year. When you're growing your sales 20% in a year where most companies were scaling back their revenue numbers, and at the same time, you're an AI company, well, what happens? Investors start licking their lips. Capital starts pouring in from everywhere. At the same time, customer count grew 35% year over year. As we know, Palantir scales in customers slowly and surely, and that means every new customer enters a longer-term monetization funnel that often leads to Palantir generating more and more revenue from them over time, which is fantastic for future quarters. Now, commercial revenue-wise, the company said it expects 2024 U.S. commercial revenue above $640 million, projecting growth of at least 40% compared with a 36% rise in 2023. Now, in terms of the overall, they surprised a bit on earnings per share, nothing crazy, 5.39% and almost a 1% beat on revenue. Again, nothing crazy, good numbers. They met and they exceeded a little bit, but nothing insanely crazy. The bigger story here and why Palantir is going up so much is because Palantir is projecting a very strong growth trend heading into all the other quarters this year, especially later Q3, Q4, and then heading into 2025. They're showing a trend trajectory that's very powerful, and when the CEO is coming out and saying we got insane demand, well, that's something that's going to excite potential shareholders. In terms of actual forecast numbers, well, on an adjusted basis, the company forecast 2024 profit between $834 million and $850 million above LSEG estimates of $658.8 million. Its revenue forecast was in line with estimates. So anyways, in my view, if you're looking at this overall, Palantir's business continues to perform and Palantir stock continues to be one of the hottest stocks out there to look at. And I think that even after today's rally, you would be a fool not to pay attention to it. Okay, quick plug before we get into the next stock. So today's video is brought to you by our completely free email newsletter, which is the first link down below. We send out near daily reports on pressing market news and events and oftentimes new trade ideas. So if you want to be in the loop, make sure to join us with that first link down below. We love having you in our email list. Join the email family. Okay, number 2, Nvidia. So Nvidia continues to skyrocket, and I personally think that Nvidia is one of the most misunderstood stocks in the retail trader community. If you're in a market that is going up and more money is pumping in every single day, well, that capital needs to find a place to rotate into, and right now, hedge funds and other fast money managers are trying to buy areas of the market that have a good value per earnings, or at least a powerful trend. Now, it's hard for me to say that Nvidia has a good value per earnings. I mean, you're paying a lot per earnings, but more so than that, I mean, it certainly has the momentum trend right now. And it's simply really easy for markets and big funds to allocate into Nvidia right now because clients want their money in trendy, high-performing stocks. On top of that, Goldman Sachs just came out and added to the hype saying that Nvidia is going to $800. All this kind of stuff really adds to euphoria and momentum that has already been very present for many quarters now. Now, on the flip side, NVIDIA's PS ratio is much higher than its competitors. I mean, Broadcom is at 14.87, AMD is at 12.47, Intel 3.38. But at the same time, I mean, you got to know that none of these players on the list are anywhere near the gold standard that NVIDIA is. If you're somebody that's trying to allocate into a beneficiary of the AI computing trend and future demand, well, NVIDIA is still the top play. There's no ifs, ands, ors, or buts about it. So what is my take here? Well, I think that NVIDIA is going to continue to be a hot stock. I think over the long run, especially, you're going to see higher and higher levels for years. But in terms of the next couple of quarters, I see more momentum coming as well before you get the next massive rug pull, which is going to destroy a lot of people and make them swear off NVIDIA. But the people that want to trade NVIDIA, which means trading the momentum up and then locking in profits because they have a tight stop loss, well, those are the ones that are going to really milk this like bandits. Now, I made a video back in August on the stock, and it was at about 502 at the time, and I explained the same argument for it. This is the time to play it with your eyes open, play the momentum, profit off the momentum, but also have tight risk management so that when it does do its dumpy cycle, you can get out. Some folks said in that video that, Charlie, you shouldn't be talking about stocks that are making higher and higher highs because that means that they're more risky because they're higher priced. Well, remember, folks, when a stock is sucking a ton of money in from the rest of the market, it has a kind of gravitational pull that just keeps pulling more and more capital into it. And when you have higher and higher highs, well, those higher highs can become exponential, and that momentum can become parabolic. Of course, the higher something goes and the faster it does, the more prone it is to massive blowouts to the downside. But that's not a problem if you're a trader. You have a trading perspective because you can just lock in your profits or you can use a stop loss. Okay, number 3, PayPal, the pal of the pay. PYPL. Now, folks, PayPal is an interesting play because it's down some 70% off its 52-week highs, and it's down some 80% from its all-time highs, and at the same time, the momentum on the chart is really consistent and has been attracting more and more buyers. Now, we love seeing stocks that are down huge, but showing proof of concept of recovery and momentum, and that's exactly what we're seeing right here. Now, I know I've been a negative Nancy on PayPal's business with its competition and whatnot, but I'm starting to rethink that given their proposed turnaround plan, and I am keeping a watchful eye heading into their earnings on Wednesday after close. Do not be surprised if you see them really shock markets. Now, one of the things that you got to note heading into PayPal's earnings is their focus on cost management. PayPal said they are going to cut 9% of their global workforce. Now, if they need these people and they can't afford to keep them, that's obviously a problem, but that's not why they're cutting them. In fact, PayPal has a new CEO and he's trying to cut out the bloat from the last bull cycle. Almost every major tech company did this. PayPal was very slow to do this, which is really weighed on them. Quote, across our organization, we need to drive more focus and efficiency, deploy automation, and consolidate our technology to reduce complexity and duplication. Now, this streamlining process should be super powerful for the pay of the pal and is going to reduce unnecessary expenditure and help earnings as transaction volume starts to recover elsewhere in the industry. So PayPal's business should be going up at the same time where their expenses are going down, which, at least from a 2-3 quarters out perspective, you should start seeing better and better numbers on these earnings. But anyways, as somebody who was, as of like a week or two ago, kind of a bear on PayPal, I was sitting there for a while and I was thinking, okay, I'm going to play devil's advocate with myself and I'm going to ask myself, what are some reasons why PayPal stock should be prone to go up more? And besides the momentum on the chart and a lot of the analysts who are underappreciating PayPal because of the competition, number one, there's a new strategic focus from the top down on narrowing the performance gap with PayPal's competitors. They're focused on key metrics like total payment volume and transaction revenues. And of course, these management initiatives can go pretty far at boosting the bottom line. As we talked about, the company has also strategically reduced its workforce to cut costs. Wall Street expects a year-over-year earnings increase of 9.7%. Revenue is forecasted to rise by 6.8% compared to the previous year. Interest rate cuts, if they happen, could favorably impact PayPal's financial outlook as well. Recent adjustments in EPS estimates show a cautious yet optimistic outlook. Markets probably have been way too cautious on the stock. I think that sure, PayPal has a lot of competition, but the value that's still in PayPal stock is still not priced into the stock. Growth in revenues from other value-added services is anticipated. Lots of new products and services coming out of PayPal. PayPal's strategic response to industry and economic challenges should have helped, and their long track record of experience navigating tough economic headwinds is going to make them at least a little bit more competitive. The company also has some unique positioning in digital payments amidst evolving market dynamics. When you have a massive company and a very well-known brand name, it's very easy to pivot and go around and acquire new talent. You just know how to adapt to different market conditions in ways that other companies maybe they don't. And quite frankly, I mean, just to summarize it, I think if you look at PayPal, I'm not going to say that PayPal is the most exciting stock in the world or that it's a killer value, but it's discounted so much that it's really hard for me not to see PayPal at least exceeding Wall Street's estimates by a decent chunk. If everybody thinks something is complete garbage, well, if something is just slightly less than average, well, you can get a massive rallyto. And it's possible that this new CEO can actually go much further at turning PayPal around with all of these initiatives and the motivation he seems to have. So something to think about. I think that PayPal is uniquely positioned to beat on earnings this week and surprise from a stock market perspective as well. We'll see what happens. You can let us know what you think down below. Anyways, that caps off today's video. Make sure to comment below and let us know what your favorite stocks are heading into February 2024. And of course, as always, make sure to hit that ravishing like button and subscribe. If you'd like to join us on our completely free email list, make sure to do so too. That is in the comment section down below that first link. Have a good one, folks, and we'll see you in the next video.